Short exercise 22-11, we're going to create a cash budget. Yates has $13,500 in cash on hand on January 1st and has collected the following budget data. So we got sales, cash receipts, cash payments, direct labor costs, manufacturing overhead costs, which includes depreciation of $2,100 per month. Now remember, depreciation is a non-cash expense. So we'll have to back that out when we get to the manufacturing overhead costs. We're going to assume direct labor and manufacturing overhead costs are paid in the month incurred. So in other words, these direct labor costs, all of this will be paid in January and all of this will be paid in February. Same with the manufacturing overhead costs. Each of these will be paid in the same month. Just remember though, depreciation is a non-cash expense. And this is a cash budget, so we will have to back out depreciation expense because depreciation does not result in cash being spent. Additionally, assume Yates has cash payments for selling and administrative expenses, including salaries of $45,000 per month, plus commissions that are 2% of sales, all paid in the month of sale. The company requires a minimum cash balance of $10,000. So if it turns out that the monthly cash balance at the end of the month is less than $10,000, they will have to borrow money. Prepare a cash budget for January and February, round to the nearest dollar, and then we need to find out if Yates will need to borrow cash by the end of February. So January, the beginning cash balance is listed up here, $13,500. Cash receipts from customers, that's already been calculated for us, so we can double click on this, copy and paste. Cash available, so we had beginning cash, we received this much, so cash available is adding those two numbers up, we get $455,900. Cash payments, purchase of direct materials. Now remember, this is a cash budget, so we're only interested in direct materials paid with cash, no direct material purchases on account. So we have to make sure that this says cash payments. So here's our direct material purchases, and these are cash payments. So we got $180,598 going out for direct materials. Direct labor, $135,040. As we said up here, the direct labor is, we're going to assume that it gets paid in the same month as it is recorded. And then manufacturing overhead costs. So all of these manufacturing overhead costs are cash payments. So remember, manufacturing overhead are things like salaries of the plant supervisor, salaries of the plant janitor, and the plant utilities, plant insurance, plant property taxes. Those are all things we have to spend cash on. But it also includes like the plant depreciation, but that is not a cash expense. So what we're going to do is we have to subtract the $2,100 from this amount, from that amount. So I'm going to put this into the calculator, 55,428. And I'm going to subtract this non-cash expense of $2,100. Because remember, this $55,428 includes the $2,100. So that gives us $53,328 of cash spent on manufacturing overhead. And then we've got selling and administrative expense. So selling and administrative expense includes salaries of $45,000 per month, plus commissions that are 2% of sales. So what we're going to do is we're going to take $45,000 and then add it to 2% of sales. And then I'm going to use memory for that. Again, you do not have to use memory. So I'm going to take the 45,000 and add that to memory. So always clear first. 45,000. MP is memory plus, so that is added 45,000 to memory. And now I'm going to take 528,000 times this 2% for sales. So clear that. Notice the number is still in memory. We did not clear memory. If I wanted to clear memory, I'd hit MC, but I do not want to clear memory. So I'm going to type in 528,000 times this 2% times 0.02 equals, and now I want to add that to the 45,000. So to do that, I hit MP for M plus. Now if I want to see the number that's in memory, I hit MR for memory recall, and there's the number. So this result of 55,560 is just $45,000 plus 2% of sales. Now I'm done with memory, so I can clear memory, and I can clear that number too. Total cash payments. So I'm going to add up these numbers here, and that turns out to be total cash payments of $424,526. So if we had cash available of $455,900 and we spent $424,526, the ending cash balance before financing is the difference. So $455,900. So I'm taking cash available and then I'm subtracting the cash payments. Minus $424,526 gives us $31,374. Now the goal is to calculate this projected cash. Excess, or if it's a deficiency, in other words a negative number, we put a negative sign in front of it, or we put the parentheses around it. So remember, the company requires a minimum cash balance of $10,000. So to calculate how much we have excess over this $10,000, we need to subtract the $10,000. So I'm going to put minus $10,000. The only reason I'm putting the minus in there is to calculate the projected cash excess. So if we have $31,374 and we want a minimum of $10,000, how much do we have in excess of $10,000? Well, to do that, to calculate that, you have to subtract $10,000. So that gives us $21,374. And we want to keep a minimum cash balance of $10,000. So if this number was a negative, that would mean we were deficient, we were below our $10,000, then we'd have to borrow. So we have zero borrowing, and we have zero principal payments because we've not borrowed anything. Total effects of financing are zero. So what's our ending cash balance? It's the same number as right here, $31,374. So I can copy that, paste it here. Most excellent. All right. So the beginning cash balance for February is the same as the ending amount for January. So I'm going to copy this and paste it here. Cash receipts, we've got $502,800. Copy and paste. And so if we began the month with $31,374 and we added $502,800 with cash receipts, then the cash available, we're going to add those two. So that's $534,174. Purchase of direct materials, we get that from right here. So $160,464. Direct labor costs, $113,792. Manufacturing overhead, we have $53,436. So we need to subtract the $2,100. 53,436. And I'm going to subtract the $2,100 of depreciation because that is not a cash expense. All these other Manufacturing overhead expenses are cash expenses. So that gives us $51,336. Selling and administrative expenses. Remember, selling and admin expenses are $45,000 per month plus 2% of sales. So make sure my memory is cleared. Make sure this is cleared. So I'm going to add 45,000 to memory by hitting MP, M+, and then clear that. Now I want to calculate 2% of 560,000. So 560,000 times 0.02 gives us 11,200. Add that to memory. So in other words, adding it to the 45,000. And if I want to see what's in memory, hit MR, which is memory recall, 56,200. So again, you do not have to use memory. You can just take 45,000 and add 2% of 560,000. So whatever works best for you. So total cash payments. So to get total cash payments, I'm going to add up these numbers. And when I do that, I get $381,792 ending cash before financing. So we had this amount available. We're going to subtract the total cash payments, and the difference is ending cash balance before financing, which is $152,382. And remember, we want to have a minimum balance of $10,000. So to calculate the excess, we're going to put a minus $10,000 in there. And so how much excess do we have? If we want to have a minimum of $10,000, then we have an excess of $142,382. So do we need to borrow? No, because we want a minimum of $10,000. We got way more than that. So 0, 0, 0. So what's our ending cash balance? So our ending cash balance is the same as this number here, $152,382. Fantastico. All right. Will Yates need to borrow cash by the end of February? Well, at the end of February, they have $152,000. They want to have a minimum of $10,000, so they got way more than that. In fact, they've got $142,000 excess. So they will not need to borrow because the ending cash balance before financing is greater than the minimum cash balance required of $10,000. It's a lot of calculations, but it really isn't all that difficult.